would you feel if you, a professional investor, lost $700,000 to some amateur investors? Well, what about the guy that promised to castrate himself if GameStop's stock price fell below $450? Let's start with the first one and work our way down. This is the tweet that Dave Portnoy shared on his Twitter account. "I have officially sold all my meme stocks. I lost $700K-ish." The founder and CEO of Barstool Sports became popular for losing a lot of money by investing in meme stocks during the GameStop short squeeze. When major Wall Street sharks were shorting GameStop, WallStreetBets started buying it. This drove the price up, and Robinhood basically banned their trading. Apparently, David Portnoy had a pretty large position in GameStop. He was stunned to see the price of his portfolio go up pretty much overnight. And then it crashed down just as quickly because Robinhood and their CEO, Vlad Tenev, restricted trading. After this barely legal action from Robinhood, Dave was pretty vocal about his loss and stated that Robinhood had no right to do this. In many interviews, said that if the Wall Street sharks were making money in this way, no platform would restrict their trading like Robinhood did to the little guys. The GameStop short squeeze is when small investors took on the street and actually won. However, Portnoy believes that Robinhood couldn't let their majority clients get taken advantage of, so they pulled the plug. It was okay to sell your stocks in GameStop, which would further drive the price down, just like Wall Street initially intended. But you couldn't buy any shares of GameStop? Why? Because the National Securities Clearing Corporation asked Robinhood to smash that like button just like you should if you haven't done so already. But no, in all seriousness, the NSCC asked the company for a $3 billion deposit, money which they didn't have at the time because of all the leverage trading from WallStreetBets. And just like that, their CEO and the company could say to the public that the only reason they halted trading was because they were over-leveraged. That might be a ploy to hide the actual fact of the matter, which is that Robinhood probably partnered with Wall Street investors and made them money. Now let's move to the degenerate day traders from WallStreetBets and see the guy that promised to castrate himself on a Reddit post. Why? Well, he has probably invested a lot of money into GameStop options, and he was waiting for the stock price to hit $450. Else, he said he would nip his bud in the bud. Needless to say, that didn't age too well. We hope for his sake that he was joking, but that didn't stop other Redditors from saying proof or ban on a screenshot from his post. And we're not done with Robinhood just yet. Some Wall Street bettors decided to use the infinite money leverage, commonly referred to as the infinite money glitch. Here's what that boils down to. Every brokerage account allows you to trade options on margin. That means you can deposit about $2,000 and the brokerage will lend you $18,000, giving you a total lending power of $20,000 to make bigger trades and earn more money, or go massively into debt if the trade doesn't go through. Well, some of the day traders on WallStreetBets managed to find a cheat code. In a normal brokerage account, you had a cap on the money that you could borrow from the brokerage. Well, the Robinhood app didn't have this cap, and they basically lent $1 million to some people who deposited only $4,000. Even though the person does become liable and will have to come up with the cash at some point, Robinhood will have to pay the money immediately to the other trader. This is a problem when you have thousands of people leveraging money that they don't have and are defaulting on their loans. They could have bankrupted the company. Robinhood quickly caught this and they immediately fixed this infinite money glitch. Ever since then, Wall Street, as well as major trading platforms, actively monitor the subreddit to see if they are developing any other ploys to track down and prevent such ploys in the future. Even though the infinite money glitch is not available anymore, let's pay homage to people like you/control narrative who deposited just $2,000 and leveraged an astounding $48,000. It's still uncertain how much he took from this trade, but some say that he just took all of that money as a gain. Other users like /you/woodc93 smash that subscribe button just like you should if you haven't done so already. But no, seriously no. This user deposited $15,000 of his own money and leveraged, are you ready for this? $957,783,000 from Robinhood. Then there's user U/Moonyachts, who deposited $4,000 and managed to take leverage an even higher $1,279,550 in the process. Needless to say, Robinhood lost a lot of money in this process, and it taught them a very valuable lesson. This is what happens when novice investors are told that they can make more money trading options. The kid was probably living a happy and comfortable life, investing in the S&P 500 for the long term. But then, he discovered something called options trading on his trading platform. What did he do? What any sane person would do. He poured $90,000 of his hard-earned money into GameStop options because he thought the price of the stock would keep trending up. Nothing could be further from the truth. That's because he bought the stock when it was still hyper volatile. In fact, he bought while the market was pricing in the 100% moves in the share prices. And when it tanked on March 11th, this is the photo he posted of his losses. This newbie actually lost $59,905 and was probably scarred for life. We wouldn't feel too bad about this if he learned his lesson and doesn't trade any more options, thinking he could become the next Warren Buffett. Can someone please explain to us how you get to zero in your portfolio? This guy should be given some sort of record for achieving this. There aren't many people who can boast they lost $411,000 and have gotten to absolute zero in just a year. $400,000 plus loss in a year. Won't go back to Robinhood. Wait a second. He's actually blaming the trading app because he lost all of his money trading volatile stocks? In a time when the S&P 500 gained an astounding 50% in just 6 months before he lost his $400K? Well, that goes to show you how ego works. You believe you're the best, and then the world isn't at all afraid to tell you you're wrong. Also, some of the other Redditors in the thread suggested he delete the app, install it again, and restart his computer. Maybe that would fix it. How would you feel if you lost $1.1 million in a single week? Well, if you're like this WallStreetBets day trader, you would think it's absolutely normal. Reddit user MingBearPig27 invested his hard-earned money, made a significant sum of money, and lost $1,102,893 in just 1 week. For some people, this would be the time to close down the account and start looking for other trades you can execute. But not this guy. Instead, he looked at all of the comments cheering him on for having diamond hands, a term that means he's not selling and he's still in the market. Well, maybe he's looking on the bright side and telling himself that there's nothing to worry about, because for the next 10 to 20 years, he can use this loss to offset any capital gains tax. That's the silver lining. You'll love these videos next.